Hello traders, you welcome back to the Forex Geek channel and you are welcome to the strategy that brings the heat. All right, so in this video we're just going to be breaking down the volume based support and resistance zones trading strategy. Okay, it's a smarter way to identify key levels on your chart using volume, not just price. All right, so traditional support and resistance are useful, right? But they can be hit or miss if you are not factoring in volume. Volume tells the story of commitment, where traders are placing real orders. So when volume spikes at certain price levels, those zones carry weight. The market remembers them. So by using volume at price tools like the volume profile, all right, let's just use the community volume profile. So basically by using tools like the volume profile, you can clearly see where institutions are stepping in, right? And that is where you want to build your trading decisions. Okay, so you start by pulling up a volume profile on your chart. This could be a fixed range or session volume depending on your platform. All right, look for high volume nodes. High volume nodes. These are price levels where the most transactions occurred. These levels act like magnets. All right. So then you look for low volume areas surrounding them. When you have a high volume area, you should also look for low volume areas that surround that high volume area. So once you have done that, okay, the low volume areas are your zones of rejection or breakout. When price returns to a high volume zone, it often consolidates or reverses, right? Then when it breaks through a low volume zone, it does it fast. So that is your roadmap, okay? These volume-based support and resistance zones show you where to anticipate reaction. Now, there are two ways to trade them. One is rejections and the other is breakouts, right? For rejection trades, you wait for price to enter the high volume zone, all right? You wait for price to enter the high volume zone, okay? You can see that we have a high volume zone around here, right? So wait for price to enter the high volume zone, okay? And then let there be a reaction. Price should form a reaction. You know, it could be wicks, it could be engulfing candles, or structure shifts on the lower time frame. So let's just go to the lower time frame and then zoom in further. All right, let's zoom in further to that particular area where you know, we had this happen. So we had various opportunities on the lower time frame. You can see we had several opportunities on the lower time frame to pick a good trade. All right, now this is an example of an engulfing. We had an engulfing pattern around here. We had a rejection wick around here. So this was an opportunity to buy, another opportunity to buy, another engulfing. We had another bullish engulfing around here. So with this was another opportunity to buy, right? We had another bullish engulfing, another opportunity to buy. So we had several opportunities to buy all around this zone. Okay. Now for breakout trades, you watch for clean moves through low volume areas. Clean moves through low volume areas. If you identify low volume areas, for example, you can see a low volume area around here, right? You can see how the breakout from this zone was so smooth. And then you can see how the price rallied all the way to this point before it got rejected and then tested this zone and continued. All right. So these moves usually come with speed and you can look to catch the momentum. Combine these setups with confluences like session opens, news events or liquidity levels for stronger signals. Always define your stop loss below or above the volume zone edge. All right. Make sure that you define your stop loss. Ensure that you also have good risk to reward ratios. Okay. Make sure that you always have good risk to reward ratio. So you want to target, the recent swing low for your take profit if you are in a buy trade, and you can also use, key resistance zones for your take profit, or you can decide to use, a fixed risk to reward ratio. All right, but just ensure that you are setting realistic targets. Okay. Never blindly trust the midpoint. Once you are in the trade, manage it based on the reaction around the zone. Do not overstay when price starts stalling. If you are in a trade and you notice that price is beginning to stall, you don't have to overstay in that trade. All right, depending on the kind of trader that you are. Obviously, if you are a swing trader, you can afford to hold trades for days or even weeks, right? But if you are a day trader, of course, the span for your trades could be just maybe some hours or perhaps 2 days, in some cases, right? So if you're a scalper, of course, your trades shouldn't even reach up to a day, right? So depending on the kind of trader you are, of course, that's going to determine the time frame you're going to trade on, and your tolerance for holding trades for long. The key is consistency. All right, the key is consistency. Stick to the rules. Do not force trades in thin volume zones, and avoid overstaying inside choppy high volume clusters unless you are scalping. All right. So if you are looking to sharpen your technical edge, this volume-based support and resistance zones trading strategy is a game changer. All right, hit that like button if this opened your eyes to a new way of trading. Subscribe now to the channel and turn on notifications for more deep dives like this one. Let the volume lead the way. Thank you for watching, and I look forward to seeing you in the next video.